What's going on, everybody? Good evening. What's going on, Spike? Welcome in. We're going to get going here in just a little bit. Welcome in, Mystery Shot. Hey, Corey. Good evening. What's going on, Fitness? Doing well. How about you? Thanks for asking. Just going to give it a couple minutes as we wait for everybody to hop on in, and then we're going to get right into it. Any questions or comments before we get going tonight, or is everybody just ready to get right into it? All right. Any recommendations for mobile trading platforms? Yeah, that's a good question. In terms of mobile trading platforms, there's really only three that I've actually used myself. But outside of that, there's really only two that I like. Number one is always going to be Thinkorswim. It's got, an incredibly robust charting platform, which is what you're looking at here on the PC. It's reasonably featured on mobile as well, but obviously there's some limitations there. I think my biggest complaint with Thinkorswim, at least on mobile, is that the user interface could be a little bit difficult to navigate at first. So it takes some adjustment. My number two, though, by far, at least in terms of mobile, would be Robinhood. They've gotten a lot better in the last few years. I mean, it's significantly improved in terms of fills and order execution and that sort of thing. And the user interface has always been good. So while it doesn't have, I guess, the most fully featured information and charting platform, I think it's a really solid for mobile only. And then you can save all your more detailed charting for the computer on something like a Thinkorswim type of platform. But that's kind of my general thoughts on that. All right, I'm going to send out one more message letting everybody know we're getting started, and then we will get right into it. All right, a couple minutes after the hour, let's get right into it. So, welcome in everybody. Welcome to the lecture for the evening. For those of you who haven't been to one of my classes before, my name is Toastie, and tonight we are going to be talking, the theme or say the title of the lecture is Fibonacci, but we wouldn't be able to talk about that alone for just an hour. So I want to also highlight on some other ways on finding levels when price is in what could be referred to as price discovery or price discovery. Yeah. Anyway, so big idea again is kind of to teach you all how to use the two types of Fibonacci extensions and retracements. And then also on a more kind of general high level theme, we're going to talk about how to find levels when a stock is trading past all-time highs. And I want to start with just this Amazon example, as it's a stock that is hitting new all-time highs as of today. So certainly very relevant. And I want to just talk through how actually we can determine some levels for this name as it continues to trade higher. And before I give my answer to this question, I wanted to pose this one to you all. If you had to determine some levels for Amazon as it continues to move higher that are reasonable, right? Not just draw lines on the chart and say these are the levels, but some kind of data-backed levels. How would you do that, or what are some examples of maybe some specific levels you might be looking for as Amazon in specific breaks all-time highs? Any thoughts? Looking for a couple answers in the chat just so we could start this one off. Somebody's got to have an idea. It could just be a guess. How would you find a level when a stock is trading above all-time highs? Anybody have any ideas, guesses, thoughts? Hedge fund projections. So that's not a bad idea. Previous all-time highs. Well, we're above all of the all-time highs, Flacco, so there is no more, but not a bad idea. Finding the higher highs, fib extensions. Yeah, only know fib extensions. Trend line, that might not be a bad idea. Yeah, so thanks for the participation, everybody. Yeah, those are some decent ideas. Yeah, I definitely don't know about every single one of those, but yeah, definitely a good start for sure. So yeah, wanted to just kind of establish that. That said, let's oops, 1 second. I remember. Oops. There we go. Cool. All right. So yeah, definitely a good couple of answers to start us off. I want to just kind of run through the list of essentially what you can do to find levels above all-time highs. So the kind of first most common example that I'll give is the Fibonacci extensions, and I'll walk you through exactly how to draw them. I'm just going to throw them on the chart real quick, just do a quick extension here. This is kind of the first most common way to find levels above all-time highs. And you can see this begins to kind of plot some levels higher up there, and these are based on a mathematical calculation. So it's not like you're just necessarily doing this super randomly. So that's kind of the first way. You could also kind of go about it by doing the retracements, but just using kind of some different levels that almost function like a extension. So for example, if I enabled some of the higher multipliers, you can see how it kind of generates some similar types of levels above all-time highs. So those are kind of the two most known ways to generate levels above all-time highs. However, certainly not the only way. And I want to just highlight a couple different ways to think about finding levels above all-time highs, just to kind of introduce the full list. The first one that I want to talk about is the Bollinger Bands. So the Bollinger Bands can act as some pretty nice targets on an extension above all-time highs. So currently for Amazon, a target would be around 199, at least from the weekly. And then on the daily around 196-ish. So that's kind of one way. And then the final way to find targets above all-time highs is essentially using psychological or round numbers. So that might be plotting out a level such as 200, right? Or in this case, 199.99. That's a nice round number, very clearly important. We could do that on plenty of stocks that have hit all-time highs recently. For example, Meta is a great one. Meta blowing out the all-time highs above 300. If we just plotted, let's say 400 and 500 here, we could see how these have been good levels on the daily. We just zoom in and plot out 400, 400, and 500, right around here. Both reasonably decent levels, right? Clearly something going on in this area here, as well as some resistance in this area here. Didn't quite make it all the way down to 400 on this drop. Another kind of reasonable level would probably be 450, right around that round number. So big idea and kind of ways to find levels above all-time highs. In short, is going to be Fibonacci's psychological levels, so essentially round numbers, and then generally the Bollinger Bands. And some of you guys mentioned some other decent ideas. You could be paying attention to maybe analyst price targets. That might not be a bad idea. You could also look at something like valuation, like a PE ratio. So for example, when something is trading like twice the average PE ratio, whatever stock price corresponds to that, that could also be, you know, a key level. But again, maybe that's reading a little bit too deep into it. But taking a step back here, let's just kind of introduce the kind of concept and purpose of the Fibonacci levels. So big idea is essentially the Fibonacci, and I think I actually, let me just check really quick. I might have a little graphic on this that I want to try and find really quick. The Fibonacci levels don't necessarily have any specific significance in the stock market. I believe where they are derived from is actually technically from like nature or something like that. Yeah, let's see. Yeah, here we go. I actually have it right here. So yeah, apparently people say that the Fibonacci sequence is, you know, shown in nature, and this is kind of all part of it. Yeah, and I think, okay, this is just a PowerPoint on how to actually do it. So we'll go through that later. But yeah, people generally say that, you know, it's kind of something that's derived from nature, and it was applied to the stock market because it was, you know, found to be relevant. Yeah, River says he was an Italian dude, good at math. Yeah, sure, we'll go with that, right? But important to note that this whole kind of concept of Fibonacci levels isn't necessarily specific to the stock market, but rather it could be a little bit more broad than just that. So talking through kind of the two main examples of fibs that we're going to cover, really they're the Fibonacci retracements, which look something like this, and the Fibonacci extensions, which look something like this. And I just have these colors changed just so I can differentiate between the two, but the colors don't necessarily have any specific relevance. Really what you need to know is the function of these two types of fib extensions and retracements. So we'll start with the retracements because they're a little bit simpler. So let's go out to the weekly on Amazon here. Generally speaking, the way these retracements work is in a downtrend, the way you'll want to do the retracements is from the top of the trend to the bottom of the trend. And you could see, or I'll say, when you're doing the retracements for a downtrend, you want to start the retracements from the swing high and end them at the swing low. And if you really want to be perfectly accurate, you can go in and find the highs and lows of these bars. So for example, on this one, it's 188.11. So you could go in here at this 100% level and edit that to be 188.11. And then tune in the low here to be 81.43. If you really want to be perfect, I mean, for the most part, you're going to get pretty solid levels from the start if you're close enough. And really what we're seeing here, and I'll make sure I enable all the Fibonacci levels, is a coefficient times a price. So what I mean by that is this Fibonacci retracement generates a range. And this range starts at $188 in price and ends down to $80. So it's about, you know, we'll just say $105 range. Essentially, these percentage ratios are how much of that range has been retraced, which is kind of why it's called the Fibonacci retracement. So for example, if price started at $81 and came back to 188, it's safe to assume that it has retraced 100% of this entire move lower, because it's exactly true, right? At this point, it's returned to the price it was previously trading at. So the whole move has been retraced. Same thing with this 78.6% level. Once price reaches this specific area, price has retraced approximately 78.6% of the entire move. And I say approximately because, you know, maybe the levels aren't tuned in, but in this specific case, it has retraced exactly 78.6% of this downtrend right around this area here. And same thing goes for the 61.8, the 50%, 38.2, 23.6. And there's a lot of information that can be inferred when price is trading at specific levels and the way it reacts to specific levels. Generally speaking, these lower retracement levels, 23.6 and 38.2%, will act as resistance in a strong downtrend. Because you'll see those sellers step in on a reasonably shallow retracement. So for example, what I mean by that is, again, this would be kind of that first example of this 23.6 level being a stronger spot to take out. So we get this kind of significant low around the $80 area. And then that first move into the 23.6% area met by these sellers, denoted by this long upside tail here, essentially indicates that sellers are still present in the marketplace and in control. So at that point, we'd really want to see that level reclaimed before we start to get a little bit more confident that maybe this is a bit more of a sustained bounce than just a short-term bottom being put in here. So big idea behind the fibs, or at least the retracements. They can be really, really excellent levels to be paying attention to, especially when the market is kind of in a range or kind of has that kind of swing high to swing low type of move. You can throw these retracements down, and then it gives you just a really nice set of levels that most of the time end up being significant. And Sandman says, which time frame do you usually use fibs? Me personally, if I do use them, it's generally on the higher time frames, so daily or weekly. But there's plenty of people that use them on the shorter time frames. And just to give you another application of this, let's take a look at the S&P just on the short term. And for example, we could look at maybe the hourly. And if we take this swing high to swing low right here, so this is an uptrend. So we start at the bottom here and at the top. You can see how this works on the shorter time frames as well. So the 61.8 level, pretty clearly holding as support. I mean, you can't really argue with that, right? I mean, multiple wicks and bodies directly off that exact level. It's not a coincidence, right? And we can look farther back in time, I'm sure, and find other similar types of moves. Let's see, for example, this one right here, starting from this swing high down to this swing low. Very similar idea here. So the short answer is this applies to every single time frame. Oh, and this is a good question from Shayna. What does it mean, or what does a swing high and swing low mean? Or what do I mean when I say that? Yeah, that's a great question. When I say the term swing high and swing low, or maybe you'll hear me say pivot high or pivot low, or significant high or significant low, essentially those are points or turning points in a trend. So for example, if we're looking at a simple, just kind of zoomed out candlestick chart, here we could talk about some significant highs and lows. So for example, when price is in a downtrend, oh, that just got a little bit too zoomed in. These would be all of our swing highs and swing lows. So for example, you could kind of see everywhere I'm marking is where price had some kind of significant turning point on this time frame. So here we have a initial high. Here we have an initial low. Then we have a lower high. Oops, that's not caps. Lower high. Lower low. Come on. Lower low. And another lower high. And another lower low. So big idea here is that these are just significant pivots in a trend. And that concept can apply to any trend, right? So we're just looking at the daily here. If I zoom into the 30-minute, right, we could apply a similar concept. This would be maybe the initial high. This would be the initial low. Here's our lower high, higher low, maybe another lower high right around there, and a higher low right around there, potentially. So this idea works on every time frames, and it's one of the more fundamental aspects of analyzing price, which is really just understanding the structure of price, understanding where the swing lows, where the swing highs are. And obviously that plays a big role when looking at the fibs, right? Because at least the retracements, well, the extensions too, but the retracements especially heavily depend on swing highs and swing lows. Without being able to find those key pivots, you're not really going to do anything useful. Like for example, if I just decided to do the retracements in the middle of a trend, like from here to here, while obviously there's always going to be some significant levels that work out, these don't necessarily have any real significance. This isn't necessarily a valid way to use the fibs. Now, obviously you're always going to get lucky with a random level. Like if I just draw them randomly, of course, I'm going to get lucky with something here. And of course that actually is a really epic level at that 50% that's just randomly drawn. But that's kind of the big idea is you need to be identifying the significant swing highs and swing lows, and then using the retracements from that specific time frame to draw the fibs out. So another idea here would be using this swing high down to this swing low for the downtrend in SPY. And then if we wanted to draw something similar for maybe this uptrend here, so I'll remove this just to make it clear. So this first uptrend where we put in this first swing high, notice how the 38.2 area was significant, right? Real close to the bottom there. You remember from the lecture, you believe yesterday, Empanada spoke on the 50 and 61.8% being a key support level. Have you found that to be true in your trades? Yeah, that I do agree with that. And I think the reason that he calls that out is because I believe I've seen this before, where that specific area, at least past the 61.8%, can be also referred to as, I think what's called the golden pocket. So like from like 61.8 to around 75%, is what some people consider to be the golden pocket. Now, that's not something that I specifically trade, but just maybe something for us to note there. In terms of why those specific levels are more key support than maybe others, is those are kind of the sweet spot, right? For not too deep of a retracement, but not too shallow of a retracement. So it's right there where, you know, you'd expect buyers to really begin stepping in force. It's a deep enough retracement to allow a bunch of new buyers or old buyers who want to enter more of their position back into the market. But not so deep, like, you know, past the 78% where it's starting to really look more like a reversal. So for example, I mean, we could even just use the weekly chart example here, here. And let me just re-show that. So for example, generally speaking, once price gets above, you know, these 61.8 and 71.6 levels, realistically speaking, this is not the probabilities of this being a real just continuation of trend become much less significant, right? And even if you're looking at the structure of price here, right, it's very clear that this is no longer a downtrend. We're now setting a higher high, sequential higher lows. So not only are we breaking these key levels on the fibs, but also the structure of price is completely different now. We're no longer in a downtrend if we're paying attention to just strictly price action, and then also paying attention to the fibs. These levels that we would expect to act as resistance, especially the 61.8, now is starting to really become support around this area. So that's kind of the significant change there. But at the end of the day, me personally, I don't necessarily stress too much about, you know, the weighting of specific levels versus other. For the most part, if your retracement is high quality, all the levels are going to be reasonably equally significant. What is PE ratio? Price to earnings. So it's essentially, price of the stock. Well, I don't think that's exactly true, but anyway, yeah, it's the price to earnings ratio. It's just a common metric for valuation. There's price to earnings, price to sales, price to book. Plenty of those just kind of simple ratios that define kind of the value of a stock at its current price. Shop is ready for some more. Yeah, I agree. But that's not the purpose of this lecture. We'll talk about that later. Cool. So that's really the fib retracements. I know we kind of talked about a lot there. I want to just introduce one kind of a little bit more advanced concept that I recently learned from Tilio regarding the retracements that I actually really like. So as I mentioned, right, generally speaking, the retracements are for a range, right? So the retracements are generally to be used when price isn't setting new highs. So they're very valid as price remains in this range. But as you can see, once price exits this range, it doesn't give us any levels, right? So not super helpful as we're in price discovery mode. However, one thing that I saw Tilio do that I really found interesting, and I think River felt the same way, is that he ended up enabling this 1.272 level. Now, if you ask me why specifically he likes that level, I can't answer that question. I just know he's done his research and he likes it. And usually if Tilio's found something that he likes, you're not doing something wrong if you like to follow him. So enabling that 1.27 or 127.2% can also be kind of that significant extension level. And it's one I think we were watching on the SPX a while ago. If you remember one of those podcast lectures, I don't remember exactly what it was from. I think it might have been, let's see, let me just clean this up really quick. Yeah, here we go. Perfect. Wow, I still have it on here. So we were using these extension targets from the retracement as targets for the market in the future. So we drew the extensions, I gotta be careful with my language here. We drew the retracements from this swing high to this correction low. This was about, let's see, approximately at 5 to 7% correction. Yeah, 6% correction. So we drew the retracements to the bottom of this correction from this swing high, and then enabled the extension targets on the retracement in order to get targets past all-time highs in the future. So anyway, that's kind of another way, a little bit more advanced, to use the retracements to find targets above all-time highs. And that's something that I've been seeing Tilio do a lot recently, something that I've kind of started exploring myself as well. And yeah, I mean, very clearly it's been working pretty nicely. This is the most recent significant swing high and swing low. Yeah, these two targets. And I mean, we could even zoom into maybe a shorter time frame here. And it just so happens to be that this lines up very closely with another one of our fib levels here. All right, so kind of interesting. Yeah, your girl, that's funny, your name. Can they be effective intraday on smaller time frames? Yeah, absolutely. Let's see if I could look to something a little bit more significant. I think, if I remember correctly, last Wednesday we had the FOMC meeting, I believe. Kind of looks like it. Let's see really quick. Yeah, so last Wednesday we had that FOMC. So one thing that can sometimes be useful, and let me just enable pre-market really quick. And let me get a couple more days. Going to last Wednesday. Oh, we're on SPX. Duh, there's no pre-market. Yeah, we had FOMC and CPI. So one kind of interesting thing that you can sometimes do is, for example, when we get news and pre-market, you can use those retracements to get levels off of this news bar. So for example, if I just take the swing high and swing low of this single candle where CPI hit, which is right at 5:30 when the CPI is released, this can provide some really nice levels just based off this one news candle. And clearly this is all intraday. And no coincidence here that this 61.8 fib ended up being the exact bottom. So this is kind of one thing to be mindful of is, yeah, they can absolutely be effective on intraday timeframes. Another way to use the fibs is when we're in a range day, right? So let's see if I could find a good range. I think the day after was a decent range day. Yeah, so super solid range day. Even if you're kind of a trader of the opening range, right? What you could do is mark out the opening range. So for those of you who don't know, it starts at 6:30 in the morning, ends at the swing low at 8 in the morning, or that's for Pacific time. So this would be the opening range. If you wanted to really learn more about the opening range, you can certainly watch River's lectures there on all that. So you could draw fibs around the opening range just like that, and then use those for some intraday levels throughout the rest of the day. Because when price is trading in a range, generally speaking, we're going to see this group of retracement levels respected. And you can kind of see how that worked out. We got the fake out below here, but decent levels, right? Not the most amazing thing in the world, but definitely some respecting of some of these levels here. The 78.6, not quite as well. But the short answer is the Fibonacci retracements and Fibonacci tools in general work on every single time frame. The one most important thing to note, though, is that when you do any technical analysis on the higher time frames, it is always going to be more significant. Period. End of story, right? Higher time frame levels, higher time frame analysis always matters more than what's going on in the short term. So for example, if the trend on the weekly is up, but the trend on the 5-minute is down, you're not going to say something's in a bear trend, right? Overall, it is very clearly in a bull trend. However, in the short term, you could call it a bear trend, right? So it really important to mind your time frame and understand that the higher time frames are always going to be the most important, and that goes with any type of analysis that you do, whether it's fibs, indicators, trend, price levels, anything. It's always going to matter. And I mean, even when you're analyzing fundamentals, right, the longer term trends always matter than the shorter term, unless you're NVIDIA and you just quadruple your guidance in a single quarter, and then all of a sudden, that's the only thing that matters. All right. Do you move, adjust your fib retracement throughout the trading session? Do you move it to other lower highs, lower lows, or higher highs or higher lows throughout the trading session? Yeah, it really depends on how you use it. I've seen flips do this for sure. And me personally, I don't generally trade too often with the fibs intraday. However, even for this example that we were just looking at, so let's say, we first had our fibs around the opening range, right, which was from 630 to 8, right around here. Right, so we first had our fibs around this. Let's say we set this new low. Oops. We set a new low below kind of that opening range, and then found this reclaim here on kind of decent volume, right? We bottomed out on high volume here, reclaim this low. What you could do, and it's completely reasonable to do, is just adjust that new low now down to that real swing low. And you can see here, again, the levels that you get from it aren't going to be, necessarily the most amazing things to write home about, but certainly can be tradable. Again, just like anything, right? You don't want to be just blindly trading this sort of thing, right? Helping or having some other indicators and other sorts of analysis would certainly be helpful. So for example, something to kind of be mindful of is maybe your intraday moving averages, right? Your 10 and 20 EMAs. Like this first break over this fib level, you probably don't want to long it, especially as we're still in a bear trend, right? But once we get these moving averages to flip positive, we break back above some more key fib levels. Right now we're at the 50% and holding on some decent volume, right? This breakthrough supported by volume, this hold of the moving averages supported by volume as well. Now you have a little bit more justification to be getting long off of the specific spot, right? We're trading above the 50% fib. We're holding these EMAs on volume. Structure has reversed and now is looking like a reversal, right? As we set a higher high. So in conjunction with other kind of pieces of technical analysis, you can certainly make this intraday sort of trading with fibs much more powerful. Like if we're just looking at the fibs on their own, which was exactly what we were doing before, right? Still certainly can be powerful, but not necessarily as much of a reason to just be getting long, right? We have that break above our previous high here, which that's significant, and our hold of the 50% fib, but we had those moving averages in, which are now giving us a short-term bull trend, and that just gives that extra piece of confidence to get in on this break and not necessarily get in here. Now, obviously, looking back, this still would have been a completely valid entry, but a little bit less justified while the moving averages are in a downtrend intraday. So just some things to be mindful of. Again, not necessarily supposed to be a super detailed class on intraday analysis, but some things to be mindful of there. Could you theoretically trade base off fib levels, or would adding your own support and resistance be a route? Yeah, that's actually an excellent question. In my experience, I've found that when I have a key level that also lines up with a fib, that's really when you get something powerful. If you can chart out some levels and maybe you're looking at the volume profile or something else to find a really nice key level, or maybe it's a post-news level or a pre-earnings level or that sort of thing, or a gap fill, and there's also a fib level that lines up right around that same area, that can make something even more powerful. So yeah, the short answer is that absolutely makes the levels even more significant. Yeah, can you adjust the fibs with their percentages? Or are they all standard? Yeah, so I'll say out of the box, they come kind of standard. But I have seen people adjust the fibs or add more fibs based on how they like to use them. Me personally, I'm generally completely fine with using them as they are, just standard default. The only thing that I like now is kind of like I mentioned from Tilio earlier, is just adding these extensions on the retracements. That's really the only modification I make. Outside of that, for the most part, I don't change anything. But like I said, I've seen people add. Let's see if I could just look it up really quick. Just another example here. Let me find it. I don't remember the. Okay, looks like some kind of crypto. Yeah, this is definitely crypto. Trying to find a good example of this. Yeah, okay, that's not a very good example. Anyway, I can't find exactly the example I'm looking for, but the short answer is it is certainly possible to change these numbers. Some people do. It's just I can't necessarily answer exactly why people want to do that. The fib also works with SPX. Yep, absolutely. Yeah, like I mentioned, Fibonacci's will work on any time frame, any instrument, just like any other technical indicator or level. I'll say the most important thing to be mindful of is instruments that you typically can't do technical analysis on. Still, you should have that same grain of salt when using fibs. So like one example that comes to mind is something like the VIX. right? Generally speaking, you can't really do technical analysis on the VIX. And if you can't do technical analysis in general, you probably shouldn't expect the fibs to be kind of the end all be all. And similar to something like the 10-year bond, right? You're probably not going to be looking for something silly like a bull flag in a 10-year bond, right? That's so fundamentally driven that you really aren't going to necessarily be caring too much about what the fibs are doing for the most part. For something like an instrument like the fibs, or excuse me, like the VIX and a bond like the 10-year, really the most important things are going to be those psychological levels. So on the VIX, it's like your 18, your 10, your 20, your 30 through 32. And for the 10-year, you know, in the current range we're trading at, I think it's like your 4, your 5, your 4.3 to 4.4 range. Those are really going to be the key levels. Have you used fibs on the opening range, or it's better to wait for a real low of the day for tracing it? To be honest with you, I actually don't really trade the opening range. I don't really day trade that much at all these days, so the opening range just isn't very relevant. But River is in here, and yeah, I think he could probably answer that question for you since he's here. And I'll put the words in his mouth. The short answer is he does use fibs sometimes on the opening range, but he can correct me if I'm wrong. What's going on, Norvin? Good to see you. All right, so bringing this all back around with our Amazon example, let's go ahead and take a quick look at something like the hourly. Yeah, let's see. Maybe a dumb question, but what are these levels used for? What happens if you run the fibs, get to the first level, then tanks? Yeah, so great question. It's important to be mindful that Fibonacci levels are just like any other instrument or excuse me, aspect of technical analysis or support and resistance level, right? It's going to fail from time to time. It, at the end of the day, nothing's ever going to be 100% successful, just like any price level, any indicator. So yeah, the short answer is yeah, that's going to happen. Depending on what your trade plan is, what you do could vary. Like for example, if you're day trading and your thesis is really based off this specific fib level holding, and it closes based on some time frame that you're trading off of, you'll probably want to stop out. But you know, if you just found that there's going to be some value at that specific fib, you're in there for more of the long term. Maybe you could, you know, take a bit more time and hold for a little bit. You said I said I don't day trade as much. What kind of trading do I do? Yeah, mainly I'm focused on swing trading at this point in time. The last couple of weeks I've kind of been just trading shares. I haven't really traded many options. So really the only two things I'm trading right now are shop shares, which those I mentioned a long time ago, been holding those for about a month. And also now just some Dell shares. So yeah, that's really the short answer of what I'm trading right now. And also we had that Amazon too, but I'm not in those anymore. So yeah. Yeah, me personally, I just unfortunately don't really have the time to day trade right now. So I've just kind of taken a step back and focus a little bit more on swing trading. All right, Norvin. I hope you hit either one of them, but you probably didn't. All right, so let's run through one last example here on Amazon. So as we discussed, right, Amazon is a name that hit all-time highs today. Right, so definitely a good example on how to find levels at these new all-time highs. So one thing that we could do is go down to maybe some of the smaller time frames, even maybe the daily. And let me just clear this all up. One thing that we could do, come on, go away, duplicated it. One thing that we could do here is run some fib retracements. And what I do is just take this prior swing high, as we talked about, right? Swing highs and swing lows. So we take this prior, why can I not zoom right now? Come on. What's going on? All right, that works. So let's take this prior swing high here from the daily, which is right here, and down to our prior swing low. And let's go ahead and add that extension above price. And let's zoom in to the hourly. And let's probably just get rid of pre-market just for clarity. And you can kind of see how we have reacted. Oh, I gotta sneeze, but I'm good. You can kind of see how we've reacted to these levels, right? So this is the previous all-time high. Obviously, that's always going to matter. And really, your next logical target above where we're currently trading is going to be this 196.65 spot, which I think, I don't remember if I mentioned that specific level in my tab, but generally speaking, there's really not much resistance on Amazon above these all-time highs up to 200. So me personally, if I was still long Amazon, my targets would be 196.65 and then also finally the 200 spot. And pretty simple here, right? That's that's just kind of the easiest way to use the fibs. Any questions on the retracements? I can't believe we've talked about fibs already for 40 minutes. I don't know how we've been in this class for this long already. It's actually impressive. Thanks for being here, Mooney. Have a good night. All right. If anybody has any questions on the retracements, go ahead and put them in the chat. But just in the interest of time, I want to keep rolling and talk a little bit about the extensions, which is very, very similar to the retracements. They're just slightly more complicated to put on the chart. So let's just do the retracements here, or excuse me, the extensions. So one thing that you'll notice is when you're placing the fib extensions as opposed to the retracements, the extensions require 3 points. So one starting point, one other point, and then finally a midpoint, right? So that's how you place down the extensions, whereas the retracements is just 2 clicks, right? 1, 2. So swing high to swing low, whereas the retracements or extensions, God, I keep getting these mixed up. The extensions start at a swing low in an uptrend, go to a swing high, and then end at a higher low, just like that. And that's a little bit off, but that's a big idea. So if I wanted to do these extensions on this major trend here, what I could even probably do is zoom out on the weekly, start here at this all-time low, 81.43, go to this first major swing high here, right? Major swing high right here, and then drag to the first major swing low, which this target is a little bit overblown, right? 161.8. So not necessarily a specifically relevant extension for me to be paying attention to now. So that's why I kind of zoomed in a little bit. So taking a closer look here on these more recent swing highs and swing lows, starting from this initial swing low here, then going to the swing high here, then drawing up to this higher low. And lo and behold, we got some nice targets here. This 100% extension lines really closely up with our 200 psych level, so definitely going to be a significant spot to be paying attention to. And then also we got a couple extensions that line up directly with our price action today. We'll just take a quick look on how we reacted around there. The 5-minute. Yeah, so definitely some selling taking place at this specific extension. So again, just another way to find levels over all-time highs, right? That's really all it is. Me personally, the extensions are really only something that I'm going to use when a stock is either breaking or my trade plan involves it breaking all-time highs. The retracements, again, as I mentioned, can be useful in either scenario, right? They can be useful in a range, or they could be useful in a scenario where price is setting new highs. One thing that I personally do is, generally speaking, when I do these extensions, I really don't generally care about any level that isn't in price discovery areas, only because we already have established support and resistance when price is below all-time highs. Like I'd have a key pivot. I mean, I'll just pull up my levels, right? You got a key level right around 185, the 2021 all-time highs here, the previous swing highs. So there's no need, generally for me at least, to use the fibs as a tool for me to get levels as price is still below all-time highs, at least on the larger time frames. Does Inside Money use fibs to sell buy, or is it just a tool for past info? Yeah, it's an excellent question. The short answer is, generally speaking, in terms of candle charts, it's not something that big money is necessarily always using. While it's something that is part of some institutional traders' tool set, the reality is, first and foremost, I believe last I checked, the statistic is about 70% of trading is done via algorithms. So those algorithms could be looking at anything, right? They could be looking at proprietary information. They could be running complex computations, anything, right? So only people inside those funds can really tell you exactly how those algorithms are trading. And then within the subset of those 30% that are done by humans, it's kind of up to interpretation how different firms are trading, right? The different hedge funds typically have kind of their own edge or own trading style that they follow. So for example, some hedge funds might be focused on arbitrage. So looking for maybe differences between equities in different markets, or, you know, that sort of thing, or differences in valuations in different markets. Yeah, I could get a little bit more deep into this, but it might not be relevant. The short answer is there is certainly a percentage of big money or hedge funds using fibs, using candle charts. But the longer story is, in reality, candle charts at their core are really just a tool for us to understand what big money is doing. It's the most accessible way, generally speaking, for retail traders to get a little bit more involved and actually understand on a more data-driven level what big money is doing. Because at the end of the day, all we can really do is follow what big money is doing. And essentially, we're just riding their coattails, right? Retail traders make no waves, whether they like it or not. Retail traders really are a very small amount of trading activity in the entire marketplace. Most of institutional or most of the moves in stock markets are all just made by hedge funds. So yeah, all our technical tools are just tools for us to understand what big money is doing and to give us ways to structure trades and understand different things. But yeah, River said it well. They don't need it. Like, yeah, they're not going to use fibs because their algo probably is just going to calculate fibs in real time, right? There's no point in, you know, some guy just going and drawing, you know, fibs because it's already done for them just based on their algorithms. So, and again, I'm sure there's probably at least a couple hedge funds that are trading the same way that some people do here. But that's, you know, not going to lie to you, that's not the majority of people. It's just not. Cool. All right, Norvin, we're not going to look at those yet. Yeah, iPhone says no. Yeah, not right now. Off topic question. Do I look at the charts with aftermarket off for swing trades or just for class to make things more clear? A little bit of both. I like to hide pre-market for class just because, generally speaking, it's not necessarily as relevant for what I'm specifically teaching. The kind of more detailed answer, though, is that what I've actually been really falling in love with is being able to see things like gaps on the hourly charts. One really nice example of that is on Dell today. Me personally, I was structuring a trade off of this 139 level, 138 to 139 area. And if you were just kind of looking at this with pre-market, there might be a little bit too much data to understand exactly where price ended up bottoming out for today. But when we're looking at the price or chart without pre-market on, you can very clearly see exactly where price bottomed out, which is just a gap fill, right? So maybe your stop loss is a break of 139, but once you see price start pulling back, it's really easy to tell a logical target for that pullback. And lo and behold, that was the bottom for the day. Now, does Dell end up letting the floor fall out and break new lows? Yeah, I mean, with my luck, yeah, that's probably what's going to happen, but that's neither here nor there. But the shorter answer is, yeah, me personally, I've been caring a little bit less about pre-market and after hours only because I'm mainly, most of my trades are really just structured on the daily and weekly. So the things that happen in pre-market and after hours don't really concern me right now when I'm not trading in the mornings like I used to. So can we check out Con? That's looking pretty good. Looking pretty good, River. Do you like this one? Yeah, this is a good example. We could even use some fibs on the downtrend here. Fibonacci extensions. So let's do some extensions to the downside here. Some logical targets lower. Wow, we can't even see them. The floor is falling out that bad. 54 cents. All right, let's do some retracements here. And add our extensions to days. Okay, so we broke a logical target here, 1.8. Let's see if there's any reaction to it intraday. Not really. So with these low volume names, it doesn't really matter what you do. These things are moving based on something completely different. Good example though, River. I'm glad you're long this stock with your whole port. It looks good for you. All right, there's two other things that I wanted to talk about in this class in terms of finding levels above all-time highs. So let's go ahead and cover those really quick. As I mentioned before, really kind of two things in terms of technicals that you can use to find levels above all-time highs. One is Bollinger Bands. Bollinger Bands can provide super reasonable targets for breakouts in general, because on a strong breakout, it's super common to see price push into that second and third standard deviation Bollinger Band. This isn't necessarily meant to be a class on indicators and how they all work, but I'd probably be doing you a disservice by not explaining them. Big idea, what the Bollinger Bands are. Kind of another synonym for synonym for them is volatility bands, which I personally would never call them that, and I think that's a disgusting thing to call them, but it's another way to think about it. Big idea is this blue line is what's considered the mean or the average, and the red and pink lines represent +2 and -2 standard deviations above that average or around that average. And the outer bands represent +3 and -3, which that's just something that I've added here. So this is two separate instances of Bollinger Bands. So essentially, these Bollinger Bands can represent when price is overextended to the upside or overextended to the downside. And you could think of them kind of just like any other moving indicator, right? They can act as support, resistance, etc. And one thing to note with these Bollinger Bands is they can very easily extend well above all-time highs. And here, for example, actually is a really nice example. Price's previous all-time high was 189.84. We broke that all-time high and literally came directly into that second standard deviation B band, and that was the top of that move. And here you can see that is not what happened at all. But 191.7, that second standard deviation Bollinger Band, ended up being a resistance level today, which right around here, right as we pressed into that daily second standard deviation band, price began to slow down a bit. And even intraday, right, we can use these, which is also an equally as powerful way to use the Bollinger Bands. Notice how every time we push really a break above that second band and into that third, we end up finding a minor pullback, right? So this is just another way to be monitoring price as it's breaking new highs intraday. There's kind of two ways to play the bands, right? I think generally speaking, one thing to note is that the Bollinger Bands are based on probability, right? Mathematically, they're based on statistics. So yeah, that's one thing to be mindful of, but also a hold above these Bollinger Bands can actually indicate strength. So if we start to use this second band as support, that actually indicates strength. It's not necessarily a sign of weakness. It's almost like an analogy would be seeing the RSI hold above 80 for an extended amount of time, right? That doesn't necessarily indicate weakness or a sell. That actually is more like strength. So that's just one thing to note there is the Bollinger Bands and how you can kind of use them. Definitely are valuable for much more than just looking for price targets, but certainly can provide you a kind of nice frame of reference. Let's look at snow just because you mentioned it. You mean intraday? They definitely don't look the same on the daily. Those are two charts that are not the same. This thing is blown out. Yeah, this guy's wrecked. Maybe about time to start thinking for a buy though around these 110s though, huh? Intraday, got it, okay. All right, and then the last kind of most obvious way to find levels above all-time highs that I mentioned is really just your psychological levels. And again, super simple. You don't need to be any kind of genius. You could ask anybody your favorite round number, and it'll probably be 100, 200, 50, 150, 120, right? Just those round numbers are always going to matter. Same with something like shop that's a little bit lower priced, right? 50, 60, 70, 80, 90, those levels are going to matter, right? So really any level that ends in a 0 is going to be something to be paying attention to. So on Amazon, it's a pretty easy one, right? 200, obviously going to be a massively important level. One of my favorite psychological levels ever is Meta 300. This is probably where I made one of the most money off of a psychological level, and hopefully River remembers this. Meta 300, right? One of the easiest levels to trade off of intraday. If price was above 300, it was the easiest long ever. If price was below 300, it was the easiest short ever. Yeah, Zabes remembers this one. He was not quite on the same page with me here, but yeah, Meta 300, one of the best psychological levels I've ever traded, and it paid for weeks on end. And this wasn't an area of new all-time highs, but really just to illustrate the concept. Price will absolutely always react to these psychological levels. So very easy place to trade off of. And it's just always a safe bet to make those psychological levels above all-time highs. You could even see on SPX, I generally do have every single round number on SPX marked out. And I guess we came into 5,500 and I need to make 5,600, but literally every single time, 5,600, 5,500 always is going to matter on something like the SPX. And that quality is shared across every instrument in the market. So, I mean, you could just see how we've reacted over time to these psychological levels. It's no secret that they matter. So yeah, that was a great time, River. That was probably one of the better trades you've ever seen me hit. Honestly, that was a great day. That was like, what was that? That was literally like 150% in like 10 minutes. Could you use Fib retracement or extensions on a single candle? Yeah, you absolutely could. And that was kind of that example that we gave for SPY on that CPI candle, just to kind of give you a little bit more background into the acronyms I'm using here. CPI, Consumer Price Index, key point of data for the Fed. Not the most important data for the Fed, but definitely certainly one of value. Always going to see a reaction out of the market when that CPI print comes out. And just taking a look at the fib retracements here, if we just take the swing high of this single bar and swing low of this single bar, you can see how these fib levels ended up mattering intraday. So the short answer is yes, you absolutely can. You should just make sure you're not doing it on any random candle. Like for example, like if I just go and do the fib retracement on like this bar here, right? There's not really any reason for me to be doing that. But for example, on a day we break all-time highs, maybe it is a little bit more relevant, like something like, even Amazon today. Right, today would probably be a great day to do the retracements, and any dip down to these lower levels is probably one you want to be buying tomorrow. So like, for example, if we come back down to this 191 area tomorrow, you probably should be buying, and we'll reflect on that. But yeah, we come back down to this area, right, 191.64, also a key level intraday here. Yeah, I mean, we'll see, right? Obviously, it's not always going to work, but we have two reasons to think that this level matters, right? Key level intraday. Also, this is the prior all-time highs. Also, it's now a nice fib intraday based on the single bar. So if for whatever reason price on Amazon comes down to 191.70 tomorrow, I would be a buyer. If you were to try that long, where would your stop be? Yeah, excellent question. There's kind of two ways to structure it. You could structure it with the swing low of the bar, like right here. Like you could bring it down to 190 if you wanted to. That'd probably be the most reasonable stop, right around 190, just kind of the nearest psychological level. But if you're trading something like weeklies, and I mean, tomorrow's going to be what, Thursday? You're probably just going to want to stop out on a break below that level, considering this one level is really the core of your thesis. So like if you're using this level as a pullback entry for a longer term trade, yeah, there's no way I'm stopping out if we break below. It just makes no sense. But if you're using this level as like a scalp or a day trade, yeah, you got to stop out right below it. 5-15 minute close below this level, you got to get out. Does that answer your question? Cool. Yeah, your stop always is going to depend on the type of trade you're taking. There's no way around that. If I'm taking a day trade, given this one room to 190, that's probably a little bit loose. If I'm taking a swing trade with 2 months time and using this as a dip buy, you're an idiot if you're stopping out based on a 5-minute close below that level. I mean, it just makes no sense, right? So anyway, that's kind of the short answer. And I'm not here to call anybody idiots. That was a little aggressive. How would you use fibs on a stock trading sideways for days? Yeah, just take the swing high and swing low of the range. Tesla is a great example of that. So obviously now we're breaking out of range here, or close to it. But for example, this would be your fibs, right? Just take the swing high and swing low of the range. Yeah, I'll show you with Disney. Sure. There's kind of how Tesla reacts. Again, not perfect, but definitely some nice bounces at some of these key levels. 50%, not so amazing. All right, let's look at this. So this, again, it's all about identifying the swing high and swing low of the range, which for me, it's probably about this swing high, swing low right there. Then we can zoom into the shorter time frames, and there's your fibs, right? Pretty simple. And the reason that I didn't start here is because this kind of looks like a trend to me. This section does not look like a range. This does, right? Here we're setting lower highs, lower lows. Here we set a higher high, then a lower low, and now we're just in the middle of the two. So this to me is the range. This is not. How do you trim you draw it on the higher time frame, then come down? Exactly, iPhone. Exactly. You could also start on the lower time frame. You get the same result. It's just a little easier for me to just do it quickly on this. How do you trim contracts with the Fibonacci level? You just treat it like any other support and resistance. If you're only using the fibs as your levels, you would just trim on the higher levels, just like any standard support and resistance. That's the short answer. you always hear people talking about adjusting their stops. Is that something you can do in charts without adjusting your order? Yeah, that's an interesting question. It depends on how you have your stop. Me personally, I never put my stop. Well, I rarely put a stop loss actually on the books. Like I rarely actually send a what's it called? I rarely actually put in a stop loss order. Um, so yeah. Anyway, me personally, I generally set alerts on the chart. So for example, if my stop loss is 100, I would set an alert right above 100, so I'm notified when price is getting close to my stop. And then adjusting my stop, what that would look like is either setting a stop at break even at that point once I'm in profit, or just moving my alert up close to my new stop. So that's generally what adjusting my stop would look like, or just monitoring that level. But actually adjusting your stop, if you have a stop loss order on the books, you need to go in and manually, yeah. And you can also do the same thing with active trader. That's a great point, fitness and futures. So if you send a sell order or a stop order, you actually can just drag that up. So like if I'm in the active trader here, I could start dragging. I could drag the order up and down to modify it. So Thinkorswim, super powerful, and you could do something like that. Cool. I think we have an active trader video actually. Definitely suggest it. All right, everybody. Well, that is pretty much all of it for us. Any kind of final comments or questions before we call it for the night? Johnny has one. All right, Johnny, where's your question? Okay, cool. Thank you. Can you discuss the important? Essentially the shallower ones are going to be more important in a strong downtrend. So like the smaller, what's it called? Smaller percentages are going to be more important in a strong trend, whereas the larger numbers are going to be more important in a, I guess, weaker trend. Maybe that was a little bit too vague. Let's just go for an example. So, for example, um, Disney, when it's in a range, really all the levels I'd argue have reasonably equal importance. And I think for the most part, a really safe rule of thumb is that all the levels are reasonably equal importance. However, in a strong downtrend, like something like S&P from 2022, if we draw this out, so strong downtrend, right? In 2022 for the S&P. Those of you might have been trading, some of you may not, but we are in a significant bear market. This 23.6 level did prove to be significant on that first retest, which if we go back to the daily now, it's a long time ago. You can kind of see how we react to that level. We popped up into it, quickly sold lower, and then finally this level actually ended up acting as support. So the shortest and easiest kind of way to think about it is all levels are reasonably they're made equal, right, for the most part. However, some traders look at them a little bit differently and care a little bit more about those more golden pocket sort of levels, but we didn't really get into that tonight. Could there be classes in the future? Yeah, I will post that in our lecture chat and let everybody know that you're looking for that. Thank you for your suggestion. That's exactly what we're looking for. Yeah, if you guys have any suggestions, if you guys have any suggestions for lectures in the future, please don't hesitate to let us know. We can absolutely adapt to any class you guys are looking for. Just let us know. So yeah, feel free to send me a DM. Level twos would be great. Yeah, cool. Suggestion as well. Yeah, go ahead and throw it in the chat. Yeah, if you guys have any suggestions, go ahead and throw it in the chat. I'll put it in the group chat. Okay, that's fine. I have no idea, Johnny. But yeah, if you guys have ever have a class that you're looking for us to hold, let us know. Okay, more swinging classes. Okay. Go ahead, put that in the chat. You got it, Viral. I'm posting all of your requests in our group chat for the lectures. So everything you say is going to go straight to our, I want to say scheduling department, but that doesn't really exist. So yeah, we will track all these requests and yeah, appreciate it. All right, Norvin, we're going to look at 3 of those and I'm going to look at FTAI because it's got AI in the name. Oh yeah, dude. Well, I already gave you the trade plan for this one, long on the retest to 80. So I don't know what to tell you there, boss. This one's gone, buddy. This one just is parabolic. Yeah, I gave you that one, dude. So I don't know. Yeah, that's gone. Let's see. AMKR. We'll just do the first 3. AMKR. What the hell is this? This is a whack one. I don't. That's where I'd be getting long. It's a little late now, though. I'm not putting any entries on that one. NVT. Last one, Norvin. I thought we looked at this one together. I don't know. I don't want to chart that one. ANET. I don't know, Norvin. What is my opinion on NVIDIA rest of the week? Some of you are in calls for end of week. Took a gamble on MU. Yeah, definitely got caught up with MU. But nothing's settled till open. If you take a look at MU, it's definitely not doing too well after hours, down $10. But MU is such a strong name. I wouldn't be too surprised to see it get bought up in the next couple days. Nvidia in general, right? The trend is still up, so not really anything to be too concerned about. It's only down a few bucks after hours. I know if you're in weeklies, obviously that's going to hurt in the morning, but it's obviously, when you're taking that gamble through earnings, you got to be prepared for things to go south. I think as long as you hold today's lows around 123, you're not in the worst shape ever, but obviously you don't have all week to just wait around and hope it goes in your direction anymore. So I'd just be real careful and watch for that 123 level. But yeah, obviously, trading through earnings, this is what happens, right? Even when you're trading the sympathy plays, this sort of thing happens. So yeah, if you weren't prepared for it this time, just know nothing's ever guaranteed. And this is a great example of that. Cool. That's cool. All right, everybody. I appreciate your time this evening. I'm going to hop off. Thanks so much for all your questions and all your engagement. Much appreciated as always. These classes would not be the same without you. And yeah, and we will catch you all in the next one. Thanks so much, everybody. Have a great rest of your week. Adios.